you guys? It's your girl AMZN and I'm back at it with my Sunday swing trade watch list. This week I actually took some ticker requests from my mentees, love y'all down, and they gave me 6 tickers that actually look really great for swing trades, day trades, and some leaps to get into. So I can't wait to go over and show y'all that. But before we do, you already know we have to start off looking at the economic calendar. The economic calendar is going to let you know when to even show up and to look at the market. So what I pulled up here is marketwatch.com, and I'll make sure that I link it in the description below, because every Sunday, this is what y'all need to look at for the upcoming week, all right? So on this site, it's not my favorite to look at it. I personally like to use Econo Day, and the only reason is simply just because when I click on any sort of data, let's say it's FOMC, which we have on Wednesday, and I don't know what FOMC is. All I have to do is click on the name, the title, and it will bring me to a page that breaks it all down. It'll give me the definition of FOMC. Why should investors care about it? What was the historical data, and what are analysts predicting the data will be next? Me personally, I love to look at a resource that I can stay on that resource. It's almost like when you're reading a book that's a little bit more advanced than you are, you have to make sure that you have a thesaurus and Webster's dictionary next to you, right? I don't like to do that. I want the resource that I'm on to also be able to teach me, and I don't have to click off on a different website. However, Econo Day does not update until Monday when the market opens. Very annoying. So on the weekends, I look at Market Watch because it will show me last week, this current week, and next week's economic data schedule. However, let's get right into it. So as y'all can see here on my screen, on Monday, there's no economic data that comes out here in the US. On Tuesday, we do have consumer confidence at 10 a.m. Eastern. It'll make the market move a little bit, but on Wednesday, oh Lord, y'all, we have job openings, FOMC, and then Jay Powell gonna talk after that. Y'all, if you are an investor and a trader, you either love or hate Jay Powell. And we never know, do we love or hate him until after he gets done talking. So then Thursday, we have jobless claims and factory orders. I truly believe that factory orders is great economic data if you're someone who trades any sort of stock that's in the industrial sector. You want to keep your eyes on it. And then Friday, we do have a couple of Fed speakers, wages, unemployment rate, and all of those things coming out, but it's not big, huge data like what the market is waiting on that's coming out Wednesday. So with me being able to look at this, I'm already understanding that Monday and Tuesday, I'm going to mind my business. I'm going to mind my business. Why? Like my good brother Rose says, time and price. And price always has a target, but it needs something to kind of give it a push. And economic data is that push that makes investors and retail traders like you and I open up our portfolios. If we get CPI or PPI data and it comes out and it's great, it's better than expected, investors and traders are going to open up their portfolios and want to buy more. The economy is doing great. But if the numbers come in and they're lower, investors and traders are going to open up their portfolio and say, the economy is dumping, I'm going to sell out of fear. We don't do that in this home though, do we? Amen. Okay, thank you for that. Amen. All right, so now we're just going to go ahead and switch over now that we've looked at this, and we're going to look at NQ and ES and then hop into our swing trade tickers of the week. Brief intermission, but we're back, and what we're going to look at first is ES. So I pulled this up and I'm observing it, and the first thing I saw, I kind of looked and I said, is that an inside bar holding the weekly 20 MA? Now I have my natural bias, but I won't share it. I'm just going to come in here and lay out the facts, amen? Because although I have a natural bias and I make sure that I word it like that to myself, I'm going to take whatever the market presents, right? Because I don't know. These people come in here and do whatever it is that they want to do. I don't know. However, one thing that I can say is that this kind of looks good to me. That this inside bar that we have here holding the 20 MA on the weekly. Now, that this drop that we had, this 2-week drop, because we absolutely dropped last week and then broke the trend line the week prior from this rising wedge. But I guess I just would have thought that the drop would have occurred a little bit more and that we might even see 48.41. So that is something that I'm looking out for, because we haven't retested this these previous highs here from 2021. And then where we absolutely consolidated at again over here in 2023. Then when we had that small or slight pullback in October, and then just absolutely blasted off and went straight up from October 2023 until about March 2024. So I just would have expected to see a pullback back down here to the 48.41, and that would make me feel better to see that pullback happen to continue to play to the long side. However, as I said, I'm going to take whatever the market presents, because these market movers just be coming in and doing whatever it is that they want to do. Now, when I come and I look at the daily here, the purple average that I have pulled up is my 100 MA. So the 4 moving averages that I use the most is going to be the 20, 50, 100, 200. Now, if you're sitting there on the other side of the screen and you're thinking the 20, everywhere that I've read, it's the 21. My brain just thinks different. When I put the 21 on my chart, I can't even focus on price action, because I'm just sitting there thinking, why not 20? Why not a whole number? Can it be 20? Why is it 21? Where'd that number come from? So for the sake of my ADHD, I keep it at 20. And if you pull up the 20 MA and the 21 MA and you do your due diligence, same thing, pretty much, okay? It's not that big of a deal. We're not going to have crazy difference in our trades, where we enter and how we're looking at it and things like that at all. However, here on the daily, something I want to show y'all here. So like I said, the purple moving average is my 100-day moving average. And then up top, the yellow is my 20 and the blue is my 50. Now, there's something that I love about the 20 and the 50 MA. Those two moving averages are known as the value zone of moving averages. Whenever we see that price comes and it finds any sort of support, and we see that it consolidates at the 20 and 50 MA, whether it's in between it, right at it, if they're kissing each other, we really want to pay attention, because we understand that this is a great time for us to enter into the market. Now, how do we know, do we want to enter into the market to the upside or the downside? Just by looking at the value zone. What we do is we look at the initial direction, the initial trend. So here we can see that the initial overall trend, right, is an uptrend. We were in a rally and we've had this pullback. It's seemingly holding for a little bit, right? That's the initial trend. However, or the initial overall trend is this uptrend. However, we see these trend lines that we have here on the daily. We see where it broke about 2 weeks ago, kind of pulled back to the 20 MA, retested it, rejected it. We lost the 50, came down last week and held this 100, with the 20 just now crossing just a hedge, just a little bit below the 50, right? So that's not only a bearish crossover, but before these averages crossed over, before this price pulled back up, there was a drop. So the initial direction that we're paying attention to is this drop as we see price pull back up here. I'm absolutely looking to see, is ES going to reject, or will it power and blow through 5160? Now remember the first part of our video, my babies. Don't expect to see any sort of clear move on Monday and Tuesday. There's nothing on the economic calendar that's going to make retail traders and investors like you and I open up our portfolio and get to doing what we're doing, which will create commotion in the stock market, right? Monday and Tuesday, chill. And if you open it up and you, knock on wood, but if you happen to take a loss on Monday or Tuesday, understand that it wasn't your skill, it wasn't the execution, it was the environment of the market. Take a break. Mind your business. Study. Adjust your charts after hours and get ready for Wednesday, Thursday, Friday. Amen. Now, if we do reject this 5160, this is what I'm thinking that we would see. I did kind of wonder if it was going to come in on Friday, but if we reject this 5160 and we come back down, I'm going to be wondering, okay, are we looking at a possible double bottom that's forming down here? What is it that we're looking at, right? Because down here we did have like a big old gap. So as y'all can see here, this double bottom, right? So if this rejects, I'm expecting that we're going to travel back on down here, and let's see if we hold here to get this move back up there. Right, so I'm absolutely looking for some. I'd like to see price pull back a little bit. That was too quick for me to fully believe in it. But again, natural bias. That's my natural bias. All right. So now we're gonna look at NQ, which is showing me the same thing. Now, oh y'all, that's a lot going on. Let me clear it up. Now the thing with NQ is the index that is heavily tech weighted. Last week we had earnings with Microsoft and Google, and oh my goodness, the bag that was made. Oh my goodness. This week we have Amazon Tuesday after hours and Apple Thursday after hours. Let's see, because all investor eyes are on Amazon, wondering, you're the only one of the big 6 tech companies that hasn't announced that they're paying earnings. And if you were to go to look on Bloomberg, they have an ex-dividend date for Amazon. The rumors are going around, because if Amazon was to come out and announce that they're paying dividends, that would be 6 out of the 7 companies in the Magnificent 7 that are giving us passive income. Do y'all hear what I'm saying, and do you understand what I'm saying? If you don't, write a comment below, because I will come back, make a video, and make sure that you get what I'm saying. That is crazy. The dividend game, Meta changed the dividend game. However, that's another rabbit hole for another video. Let's get back on focus. So with that being said, with the tech, right? Now, when we were looking at ES, we did not see the 20 and the 50 MA appear diverged away from each other. When we're looking at NQ, which again, heavily tech weighted, that's all I see is that the 20 and the 50 MA, the 20 crossed below the 50 MA, which is a bearish crossover, and they've diverged away from each other, meaning that there's actually momentum behind this bearish crossover. Okay, and y'all know how I feel about the volume. You have to look at it every time that you look at the candle. You look at this candle, you bring your eyes down to the correlating volume bar. And when I'm looking here, I see that the volume decreased a little bit on Friday. Got my eyes on it. We come back and we look at it on the weekly. Again, I see an inside bar, a bullish inside bar. But one thing that y'all might notice is when we're looking at NQ on the weekly, it actually lost the 20. Now, did it close above it? The week before, it actually lost to 20 MA. The week before it, or this previous week, it closed a little bit above it. But y'all, I'm watching to see, will we make it past the 17,945? And I'll honestly even say more so, we'll say about 17,970, 17,950 to 17,970, which I know is a wide range. But me, I'm a zone girly. I'm a zone girly because I understand anything goes from in there. But with that wide range that I've given y'all right there, I'm absolutely looking to see if we'll have a return back down here towards the 17,200 area to this support here. And if we lose that 17,200, all right, amen. All right, so first off, we have Oracle, which when I pulled this up, I just immediately said, oh, I like what I see. So I did see this double bottom here, which I know a lot of people don't trade with chart patterns or hold too much weight to them. I honestly don't hold that much weight to chart patterns or candlestick patterns because I understand that the only way that we're able to confirm if that pattern played out is if it plays out. Right? And so I would suggest that y'all would look up the probability of certain patterns, whether it's a chart or candlestick pattern, actually playing out, because fun fact, it'd be a little nugget for you to have. However, one of the main reasons why I really pay attention to chart patterns is because I understand that there's going to be certain chart patterns that we'll see if we're at a supply or a demand zone. So I just always have been like and teach that if I know what those high probable patterns are that I should expect to see at either supply or demand, then my eyes are just automatically looking for them. And when I see them, I'm able to easily mark off the supply and demand range that we're currently in. So when I saw this double bottom here on the weekly, I said, oh, and where we see where it topped off at. Now I understand that this week's candle did give me, it did break out higher than that, but we also see that it closed below this level, where in June and then again in September, it came up there and touched it, rejected it. We could even say that this was a double top, which we should expect to see double tops at supply and demand zones, came down here and double bottomed, which we should expect to see at demand zones, worked its way back up. But something that's absolutely fascinating to me is this volume as price pulled back from this demand zone, because we see that this week was actually the first time in this chart's history that it did break above 127, we'll just say 128 to round it up to the next psychological whole number, right? So found that quite fascinating. Closed below it because this week we closed, or the week where was that a gravestone doji, it closed at $127.79. And the level that I put here is 127.45. So if we see the high of this week, 127.54, the high over here, 127.42, right? So this 127.45, I feel great with it. Again, close there, boom, boom, boom. But like I said, the volume as price pulled back is lower. And then look how it came and it held. So this that I marked off here, that y'all see here, is I marked off the gap that was created in June 2023, June of last year. So I marked this gap off, and look how price has just respected it all these weeks, held it as support. They even tried to break it below this gap, but it bounced back and closed right on it, right? We got a break and retest above it. It failed to do it. Now watch, when price did break above this gap, look at the volume. Look how that volume decreased, right? A big shift in volume, which at that time would have let us know that this isn't about to work its way back up to 127.45. So that's how and why and what I see when I'm looking at the last 4 weeks or the previous 4 weeks when price was pushing down, is that low volume pullback. However, that's a natural bias that I just created right there. So I'm not a fool to understand that I need to watch for price to break this weekly trend line and the gap, right? I don't think, especially since we saw on this week right here where sellers did attempt to push the price and close it below the gap, but the buyers stepped back in. I wouldn't want to get caught in that. So as far as entering to the downside and with expectations that we would see this approach down towards about 100, right? As far as seeing for that, I wouldn't even want to get into it until I saw price break below this gap, because historically, and even look right there, right? They bounced it back up in the same place there. Just not interested. So all down here, what I marked off here is just the entire range that I'm looking at as the demand zone, because we understand that demand zones aren't just one range. And I usually have my gaps blue, so let me change that real quick because it was bothering me a little bit. So in this entire range, so I would love to see if Oracle, one, holds this trend line, but if it doesn't, below 110 would be beautiful. And I'd be looking, like I said, for a move down towards near 101.25. We do see that there is some bearish momentum starting to come in with MACD, but overall on RSI is still above 50. We see it's at 56.77, which is absolutely in bullish territory. So I'm looking. And this held the trend line because it's been holding this trend line since October 2022, right? Returned to January 24, and this is where we are now. Now, subjectively, the candlestick pattern that we see right there is an inside bar, subjectively. But we can only believe in it if in the week that's upcoming, if the high of last week was 119.21, and I'm the type that likes to round it up to the next whole number. So if we see a break above 120, I moved my face over to the side a little bit. So if we were to see a break above the 120, I'll say the next psychological whole number, your girl's a little interested. I would be very interested in taking this in to make a new high, because we've made higher lows, and we could say equal highs, which is a chart pattern, my babies. Comment below, let me know what chart pattern that is, where we see that we're making higher lows but equal highs, near equal highs. What chart pattern is that? So that was step 1, 2, and 3. If you know, you know. Now we're going to move on and continue to check out these indicators. Now, what I absolutely love, y'all know I love me some 20 and 50 EMA. We don't have a crossover. We had last week hold the 20 and the 50 EMA in this gap on the trend line, closed above it. I like this. I would like this. I absolutely would really like this, and my eyes will be on it this week. So I'm going to go ahead and mark this range off and set an alert to just let me know when price comes to the 120 range. And then I'll check on it towards like power hour every day, because maybe price pulled back and I'll be able to see, maybe it pulls back inside of this gap, and then we get a high probable price action signal like a pin bar, a hammer, an engulfing pattern, or her inside bar, whatever it is that we see that would give me that price action signal that we're on our way back up. But other than that, I would like to see for this break the high of last week before I did enter. Now, if we came down to the daily, loves. So doesn't this look eerily similar? This looks eerily similar to something that we've already looked at, my babies. What sector is Oracle in? They're called the futures for a reason, children. Well, not my children, y'all are my babies, but love it. So again, now actually on the daily, the 20 MA is at 120.30. I'm actually going to move that up a little bit to right there. Because just, I don't want to know. I don't want to be alerted before you cross all these hurdles, all these roadblocks and things like that, right? So, man, what a rejection from the 20 MA right here or from the 50 MA with the 20 MA definitely curved down. I would not be mad, my babies, because every candle has to make a high and every candle has to make a low. So even if next week's weekly candle is bullish, at some point it was bearish while it was making the low in the lower wick, which is the low, right? So wouldn't be surprised, and I would actually feel a little bit better if this did pull back before it just went straight up. It made me feel better to stay in the trade with expectations that I entered on the pullback. I should be able to rock this out and not see another pullback for a little bit. Make sense? So I would like this. Now, to me, this is a beautiful setup for a swing trade. If you know, you know, I'm a swinger. Keep it cute. I'm a swing trader. Keep it cute. If you know, you know. But I do see some great day trade setups that are here as well. And we pretty much talked about those, right? We're looking for if we want price to come back down before you trade it back up, right? And again, the reason why is if you get in when price just goes straight up, you have to understand that it's going to pull back. So why not just wait for it to pull back and then go back up and create a higher high, right? It'll be a bigger move than just catching a piece of it going up. However, y'all feel me. Y'all heard what I said. Let's go ahead and move on to our next chart, which is Costco. I'm a little confused on why I was sent Costco as a request because you did get the full analogy with AJ. And as you can see here on the weekly, nothing has changed with Costco. For sure for the last 4 weeks, right? Look at here. We have literally the same open and closes right here, right in this tight range right here, right? If I haven't taught y'all anything, the one thing that I want y'all to walk away understanding and really sinking in is when price is consolidating, mind your business. What trade do you think that you're going to see when it's sitting here sideways, same highs, same lows? You've been taught what happens in the accumulation and the distribution phases. They want you to come in here, think that price is going up so that they can fake you out and take your money. Yeah, man. Okay, so with here, honestly, this would be more so where I'd want mine, right? Because like the last 4 weeks we can really see that, but since price did like break to the upside right there, I'm cool on it. I'm gonna go ahead and put it here. So we have us a range here from $697.50 up to $755.21. So literally almost a $100 range that Costco has been in. If we come down to the daily, we do see what could probably maybe be a double bottom subjectively somewhat, right? However, we have a bearish crossover here with the 20 crossing down below the 50 and it's rejecting the 20, right? But look how price is landing and staying in between the 20 and 50 MA. If I'm looking at the initial trend, I would think we see that MACD did do a bullish crossover. It's not in positive territory yet though, so I'm not sure if I would. It's just clearly from looking at this right clearly, and we do see that RSI is at 48.31, so it's almost above 50 in bullish territory. But at this point, and I don't have any suggestions for day trading Costco. I'm just gonna be honest, like why do you want to day trade? But hey, all right. So we see where we see what's up here on the daily and the weekly time frame. It's absolutely holding this 20 MA. Now, I do see a falling wedge here on the weekly. You could see it a little bit clearer here on the daily. Let me turn this off. I was like, what indicator is on? The averages, girl, duh. So we see a falling wedge here. Now, when it comes to these chart patterns, y'all, it's a memorization game. It's a memorization game. I know you don't want to hear it, but it is what it is, right? You're going to have to spend some time studying them and not the picture perfect versions of them. You're going to have to spend some time studying them, like using resources, right? And then just finding tips and tricks that will help you to be able to identify them quickly. So when it comes to anything that is inside of trend lines, because the double bottom, the inverted head and shoulders and things like that, we don't see those chart patterns inside of the trend lines. But anything that we do see inside of there, we have our support and our resistance here, right? When they wedge, don't think, oh, is this, or when it wedges like this, we start to see like a little point, right? It's a wedge. It's in the neck. So again, we look outside of the trend line for the initial, or at the start of the trend line for the initial move, right? And so here we have like this drop down in here, and then we're making these lower lows, lower highs. you looking kind of fallen wedges to me. Okay, which is bullish. But again, I just wouldn't even feel safe to advise, it's not financial advice though, to do anything until it broke out of this range. Because why? They also do have earnings coming up the end of May. So if this is something that you were looking at to get into position now, then I highly suggest that you do some, put a little elbow grease on, get on your resources, and see what the analysts are anticipating that Costco's earnings will bring them and what the implied move for Costco is. Right, so now we have Starbucks. We got a Starbucks here. And this looks great to me as well. When I saw this, so this trend line that we have here, beautiful, beautiful, beautiful trend. Uh-oh, y'all. Look at this. And this starts from November 2023, rejected it February 2024. Again, kind of in February. Didn't quite get up there in March, and we've returned in here now in April. So that's the resistance trend line. And of course, we want to draw our support trend line as well. So I'm going to go ahead and mark that off there. Let me put it here. And then I mean, just absolutely beautiful. This push up here, we're almost to that trend line. Back in here to this demand zone, previous demand zone. So to round it up to the next psychological whole number, 90. If we did see Starbucks above 90, and it also broke in on a daily candle, it broke and closed above this resistance trend line. I mean, I see. I could see that. Let's actually look at the weekly time frame first. I was looking like, is this a morning star? Not really. The volume did decrease slightly last week, but I believe that was just really across the market period. Child, we were nervous. We were nervous. The one thing trading is going to make you do is go to therapy and work on your nerves. All right? Which, don't believe the hype of the stigmas behind therapy. Because I am a professional therapy goer. Love that lady and her couch, okay? It's done wonders for my mental health, which then turns around and it shows itself up in my trades and in my portfolio. So I'm here for it. However, I'm not a big fan of this spinning top, as it's like rejecting this, right? Because this is just called space bait. Like, that's a rejection. You just, you know, not the biggest fan of that. But again, a break over here. And if you really even just wanted the confirmation, wait for it to cross above 92. Because if it crossed and closed above 92, I'd feel really good for this move here to 97. That would look beautiful to me. And I'm just adjusting this level because I'm looking left, right for where I would want to put it. And this is actually a little bit better. So sorry, y'all. That even makes me want to say the 93.50 would be safest if you trade the break of this trend line and you enter right then. You're going to have to understand that at some point, probably sooner rather than later, it's going to retrace back to that trend line, right? So let's go ahead and look at our averages. Prices below our averages, we have a death cross here with the 50 crossing below my red 200 moving average. The 20 cross below my 100 moving average. Bearish signals up there, right? However, something I want to show y'all, and I'm going to turn off the 3 of the averages here on the ribbon. I'm going to keep up the 20 and then turn on my 9 MA, which will be this green one. So looking there on the weekly, that's right what we rejected here at this zone, right? Is that, move that back, is the 9 MA. Now on the daily, which you're going to start to see the moves sooner on your daily time frames, right? And so you see how these moving averages were diverged, they're away from each other, like this entire drop, which is let me know the momentum was there, right? There was never a sign that the 9 was a I guess kind of right there, that the 9 was attempting to make any cross, whether above or below the 21 until right now. Now, what I don't like, unless this holds this and the 9 is starting to cross above the 21 MA. What I'm not the biggest fan of is that the 20 MA is not always also curving up. The 20 is still coming down. So that's something to watch for next week. Now let me come down here to the hourly, because I'm sure that this is something that you're more so looking at for a day trade. And I'll make sure that I get y'all the AJ analysis. So let's come down to our hourly time frame, and what we want to mark off now is our secondary trend line. And I'm going to offset my secondary trend line in here for and make it blue, just so we don't get confused. I like to color code my chart, and it keeps me interested in looking at my chart. So you see where we held it here since coming off of the support trend line on the higher time frame, so our primary trend, right? We see these touches here. This is beautiful bullish thing with the increased volume as it's going up. And yes, is this bearish volume increasing as it's coming down? Yeah, but look how, just regardless, the bearish volume was lower than the bullish volume that was coming in. So I just don't really believe in it. Now, I would love for this to pull back towards the trend line a little bit more, so around 87.80, 87.50. I would absolutely love to see that, and I would be watching to see if it'll hold a secondary trend line, and then that would be the move that would get us to go back up to the top. Starbucks also has earnings coming up this Tuesday. If you're not already in position, here's my thing. You have the ability to see when these companies' earnings dates are. When you should not, how do I want to say this? I'm just talk how I talk. You have the ability to see when their earnings report date is 3 months in advance. Stop looking at plays the week that they report earnings, trying to see how you can get in where you fit in when you should have done your due diligence 3 months ago. This is nothing that you need to be looking at swing trading. Now, I know y'all are sitting here. Some of y'all are sitting here like, you posted this on YouTube. Why are you yelling at me? I'm talking directly to the person who requested this. Why are you, if you are, why are you swing trading or trying to enter into a swing trade on something that reports earnings in 48 hours? We should have been got into position months ago. All right? You feel what I'm saying? Because now you're just risking it with a theta crush, like with the Greeks just completely going your way, with them doing a liquidity crush, whatever you want to call it. Even if you bought the right contract and price ends up taking off in the direction that you said, they're still going to kill you on those premiums. No. You get in and you swing it before. It's based off whatever you think. Now, if earnings last week didn't tell us or show you anything, is that, yeah, the chart matters, but not always when it comes to earnings report, because it's about investor sentiment when that guidance comes out, when the forward guidance, when they let us know their forward guidance, which is pretty much when they do the earnings calls, they tell us and address the things that didn't go well. And then they tell us, but look, this is how we're going to fix it. And this is how we're moving forward. Or this is how we're going to move going forward. That forward guidance, right? And let us know what to expect in the next quarter, which is quarter 2. I haven't done any research as far as financials when it comes to Starbucks. But what I was saying, sorry. ADD. Let me go back. If last week earnings reports didn't showed you nothing, it showed you that the technicals don't always matter when it comes to this, right? Let's look at Tesla. Tesla was definitely set up technical analysis wise to do a drop. They missed earnings, but the price shot up. Let's talk about Meta. Meta's chart looked like it was gonna go up. All signs were leading to bullish, but they came in and they said, hey, it's gonna take us a little bit of time before we actually make money with AI. And the investors started to pull out of their position, and Meta dropped. Google absolutely had a rising wedge, which is bearish. But it came out and they up there in the AI race, and investors said, let me get some of Google. And it took off. You see what I'm saying? So you're playing with fire if you're trying to swing trade Starbucks, and they have earnings in 48 hours. Now, if you're asking me because you want to know what happens after, look, who knows how far this is going to push up, right? You shouldn't be trying to trade it on Monday. Maybe it'll give you a move. Even on Monday, a very straightforward day trade would be, I would say, a break below the low of this last hourly candle. But I see this wick over here, and anytime I see wicks, I'm like, oh, it's a rejection. So we do, oh, and look, when I cut off the wicks, it's right there at the trend line, like about 87, 81, right? So we could say like below the low, like below of Friday, below 88.20. Well, that was Friday. I don't even think that would be worth it to the trend line, but if it comes to the trend line and holds, I would absolutely look for a move back up towards the 89.91. However, just wait till after earnings reports, okay? The chart will look totally different because it could break. It could break either way. It could shoot up and we come back and it's already up here at 97. It could come on back down here to the support trend line. And then we need to, again, analyze it again, right? Wait until after earnings. That is the best piece of advice that I can give you and will give you, all right? Now, target. Now, I know y'all see right here that I wrote head and shoulders, but I saw that more so on the daily time frame, a head and shoulders. On the weekly time frame, I see what could potentially be an inverted head and shoulder. And let me show you how both those chart patterns make sense. Y'all are gonna be like, how can you see an inverse and a head and shoulder? Let me show you. All right. So target here on the weekly, failing to break above this 200 MA. We have a bearish crossover on RSI, but in its near oversold territories, it's in bullish too. MACD's momentum is starting to slow down just a tiny little bit in there. Target isn't just like the most traded stock out there, right? So we see here on the daily this beautiful set of trends, or this beautiful trend line that we have. Let's turn these averages off so we can actually see. And let me make sure that I draw the resistance trend line for you as well, because I've created a dirty little habit of only drawing the trend line where price is at no, let me draw this. Now, remember what I said, that if we know, or that there are certain chart patterns that we should expect to see inside of certain or at certain zones, whether it's the supply or demand. So right here, we can clearly see that this is acting as supply, right? It's resistance. What type of chart pattern we expect to see up here? Bearish one, with a head and shoulders being one of those. So, and head and shoulders are still formed even when price gaps, right? So slightly subjectively, we could absolutely look at this as a head and shoulder here on the daily. But again, when I go back to the weekly and I'm looking at it overall, right, it's kind of like, so then that makes me say, well, that head and shoulder on the daily might be that push down here towards the, we'll say 142.50, 143. Give us this move down here, hold where it's previously held, right? And then it turned into resistance. Give us this and then move back up. But it's all going to be what's in that report. It's all about what's in that report. Everything, all of it. It's about what's in that report that comes out, or that earnings report that's going to come out. Because is Target even doing well anymore? We're not. I know that I have a lot of physical stores. Back to the daily, and their earnings is May 22nd. May 22nd. All right. So subjectively, I feel like I see a head and shoulder, right? Could even be a double bottom. I know y'all like, dang girl, what is it? I'm not Miss Cleo. I don't know. That's why chart patterns are very subjective. You can only confirm it when it breaks out of it. And looky here, prices in between our value zone, the 20 and the 50. Holding it in here, the initial direction was an uptrend. So again, we'll see. Now, if target does lose, I'm going to say 162 for the whole number. I would look to, because you see we do have a gap here. Let me delete this. From us closing here to there, falling window, right? So, and I'm looking at this as a gap, so it closed right here on the 20, and that must be earnings. The last earnings report they had, actually. And then just shot up. We getting this, feels like an inverted head and shoulder. That 20 MA sure is coming down. So now I want to measure where the 50% point is in this gap. I'm going to measure the halfway point, which is about 157.54. Let's redraw that. I was like, is that what I'm trying to mark off? I don't really quite think so, but we're gonna. Well, now that gave me 156.66, so we're just gonna split the baby, Sophie's choice, and we're gonna go at 157. You see it, all right? So that's about that halfway point in here, and then I'm actually gonna redraw that one more time, and instead of doing it here at the close of this bearish candle, I'm just gonna do it from wick to wick. And see if that measurement makes more sense to me doing it there. Let's see. And then we'll drag that across. And this is giving it to me at like 160. So I'm going to go ahead and put that there. And this is the path that I would follow down. If we saw target loss 162, I would be targeting the 160 and then the 157.8 after that. Let's look on the weekly. Now the 20 has come in and crossed above the 50. It's crossed above the 100. Hey, it's trying to work its way back up. And let's see if I turned on my 9 moving average if it also crossed above the 20, which it did, but okay. See, we got that crossover right there. And the 9 MA is right in here at the support trend line. That's what it's kind of hanging on to, hugging in there a little bit. So I, just from looking at this and seeing the potential of something, I'm interested in this. Just let it lose its support levels first. Just let it lose these lows first and then get your money below 162. Sexy. It's sexy. All right. Now we have Mara. Again, why are y'all asking me the same ticker requests? All right. So in here with Mara, y'all are actually going to love AJ's analysis with that. Oh, and if you don't know about AJ, click the link below because I have created on-demand mentorship or on-demand mentoring using AI. Check back later on this week for a video guide on how to utilize AJ and how she will help you to become a fisherman in the market for yourself. So here I'm loving that this 9 came down to my 200 MA. We got this move back above it. It's crossing over it. It's looking like it's attempting to break and close and make this move above the 20 MA, which would break out of the trend line and come back. And all of this good stuff. So I'm absolutely interested in this. But you see how we have these same highs here? So I'm gonna need to see Mara above 20 in order for me to trade that. Now, if you absolutely wanted the safety, you could do it above 22. And when I look across, there's nothing but gaps, just all in there. Oops. Not all gaps are fair value gaps, and not all fair value gaps are supply and demand gaps. I know y'all gonna be like, so what's what? Due diligence. But all right, see, we gap there, gap there, gap there, gap down here, gapped up there. That's about the same, but gap there, gap there, gap there when it came down. All of this stuff. So this range from 2150 to the 2240. I likes. All right? And it just depends on how you want to take it. It depends on you. Are you a swing trader or a day trader? Now, y'all know I'm here to talk to y'all about the swings. It's swinging Sunday. All right, amen. So I know y'all want to, but just wait. I enjoy being late to the party. So this 2240 here, like I said, I enjoy to be late. We even really have a gap down here too. Well, not even. We absolutely do. So I'm gonna bring this down, and we're gonna just go ahead and call a spade to the 2045. Like a $2 range in here to what we have. I would rather wait for it to break above there. Now, Mara is good for day trading, especially if you are trading in a quote-unquote small account. Absolutely love it. Now, see how all of these averages here, these three averages, the green is the 9, the yellow is the 20, the red is the 200. They're all doing bullish crossovers, right? These are all very bullish crossovers, and it's holding it. Kind of like a chair. It's just sitting here and it's moving. We got a pullback in this last 3 hours of the market, but it came back, gave it back. I would again, just look how much it rejected in here. I'm not interested. If you did see it break above this 19.69 or 1970, and I'll go ahead and put a level there so you can see what I'm looking at. Anytime that I put a level on my chart, I like to just look left and see what I see, right? So see how it was perfect resistance right there, held as support there, resistance, support, just all over, right? Like this 1970 is key. So if you did catch this above 1970, especially with Mara, for a push into the bottom of the gap down around 2050, that's almost $1 move on Mara, which would do very well for you. Now, if I was to measure that, that's a 3.7% move in price. That above this 1970, targeting the 2045, 2050 first. And if you bought multiple contracts, you can scale out there because it's not going to get there and just blast off. More than likely, what it's going to do is come up here, maybe break in a little bit and then pull back. And if it's meant to hold it, it'll hold it and then blast back off. So if you have multiple contracts and you want to scale out and hold one for a runner, you absolutely need to do it when it hits to 2045, 2050. All right, and now we have Snow and CAVA, and those are going to be our last two. This was absolutely supposed to be a 30-minute video, but I'm back and I don't know how to be quiet and stop talking. So we have what we have. All right, so here I actually was writing my thoughts for the 4 for 4, which I pay attention I analyze, I chart, I enter and exit and look at it for my confluence in this order by looking at structure, which is what I just go ahead and say for supply and demand. Then I observe what price does at the trend line. Then I'm observing price action specifically, which has to do with the candlestick pattern, chart pattern, volume, right? And then the indicators. It's a checklist. It's an order and it'll allow you to analyze top down, right? So this one is on, but not quite. It's accumulating in this demand zone, but we did get us a little break out of there. We got us a little break out of there, right? It has not retested this trend line here that it initially broke, the initial primary trend line. Let me take all these averages off. We don't need computer generated indicators. Yeah. All right. So love, but it's sitting right here where price was kind of gapping down to. So I'm gonna be honest, I don't like any of this down here, especially not on snow, not as a swinger trader. Not a fan. All right, now after it did this little gap down, we do see where it held resistance here. Now I know you're like, but there's 3 candles out there, but let me show you why I placed my trend line there. Let me make sure I get this good at the top for that high. I placed it there because this was just the last 3 days of the market. I'm not ready to move my trend line there, right? I need to see when price broke said trend line. So we have this high from March 1st, rejected it again April 12th, and then we broke out of it April 24th, pulled back a little bit on Thursday, and then gapped up out of that on Friday. I'm looking. Let me move that because I don't, well, it's kind of right, but I don't want y'all to get too hyper focused on that. Now, I'm gonna go ahead and delete these levels here. We're just not even up there. I don't need all the extra noise on my chart. And we'll go there. And this level, I'm going to go ahead and bring down here. And the point of reference that I was looking at is here, here, held it there, resistance in here, right? So this 167, as far as a swing entry, I like that 167. Turn my averages back on. Favorite thing I like to use. Oh, baby, that's a golden cross. Or that's a death cross. That's a whole death cross on the daily with the 50 crossing below the 200. Now, do I believe that price is going to pull up into this 167? More than likely. More than likely. So if you do happen to catch a day trade, let's say if it crossed the high of last week, which is going to, I know I'm on a daily, but this was, the high of last week, which is about 161. Rounding up. If you were to see snow move above 161 and you wanted to catch that day trade to the 167, which I believe is in its average true range, that it could make that move up. Typically on a daily, it makes like a $5.25 move up. So if we caught it above 160, we'd be looking at about 165, which is, we're not too far up, okay? Because if I move that down, point of reference again was I just wanted to catch bodies over here, wicks, top of wick stuff, right? With that up there, because I absolutely would not be playing calls up until where the 50 cross below the 200. That's one of the most high probable moving average crossovers is when the 50 crosses above or below the 200 MA. I'm not messing around to find out, are you? Amen. So yes, again, if you did catch this above the high of last week, so we'll just say the 161, and you wanted to play it into the 165.50, 166, I can see that. Let's come down to the hourly. All Friday, it just sat here and consolidated. Didn't do anything, but it does look like this 20 MA is, the 20 has crossed above the 50, the 100, and it looks like it's coming up here to attempt to cross above the 200 as well, which again could give us that push. So you see how there was a gap here on the hourly as well, which is right in there. So that's what we're looking for there. And then the last one that we have to look at is CAVA. CAVA group, CAVA group. CAVA. Brand spanking new. I mean, this chart don't have but one high and one low. It went up, pulled back and made one low, went straight up, pulled back and made another low. So 2 lows in, okay? It's not much analysis to give you based off of this, but we do have a trend line there. We have our daily. Girl, we don't even have a full 200 MA moving average. Well, that's what MA stands for. But okay. But so with this trend line here, love it, love it, love it, love it, love it. Held it again in there. Love, 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 love. Okay, look at that. That 20 and 50 MA came on down there, moved back up. On the daily, held that 20. RSI giving us a bullish crossover. RSI actually broke into positive territory, just barely, just a little bit, with a high volume break above this 20 MA. And it closed the gap, closed above the gap. Y'all see these highs right here, though, at the 71.75. Baby, it ain't but $2 away. Just be patient. That's me. I enjoy being late to the party. Subject, that's not really a Morningstar pattern. Definitely these patterns, y'all. I can read the candlestick. I don't need to memorize the name, but this double bottom and bullish, or bullish engulfing, I'm not mad at it. I would want to see price pull back a little bit first, though, before I play to the upside. Just because if price automatically goes to the upside, I never gave price time to make a lower wick and come back down. You feel what I'm saying? So it just doesn't even seem like a safe trade until, like I said, it comes back time, or it comes back down. Now, I don't know if it would come back down to the trend line. Maybe we'd see it pull back towards the 20 MA. It's all about watching it, but let's look on the hourly, because that's where oh yeah, look at that on the hourly. Look at that. We got a tweezer top, which is bearish on the hourly. I could absolutely see it coming back down. So we have a gap here, previous resistance, kind of. I could see this doing a pullback towards the 68.20 and possibly even the 68.70. So what are we going to do, my babies? We're going to mark off this range so that we know what we're looking at in the moves that we want it to go through. We're going to say that. I do like that. It looks great going straight across. And then we'll check these levels on the 15-minute, right? To make sure, like, if we were actually day trading it, it makes sense. So, or it made sense. So I do like that there. And then we have this previous support in here. So I'm going to just like to mark the range off. So let's go to the 15-minute. Look at that 20 MA all the way up there. So again, if this was to lose 68, we'll say if it was whole number, if it was to lose 68, I would be interested in a move. Down, and this even would be a really great day trade if it lost the 68.16 to play it down into the 66.80. I really like that. Let's go back to the daily. The only count it's just kind of like holding it. And so I'm just going to go ahead and mark off the range, because that's like a really tight range. So I'm just going to go ahead and mark the whole thing off. And let's come back to the hourly, which is, oh, look at that, beautiful, where that gap was. Rejected the top of that gap, rejected the bottom of the gap, coming that down here. So I'll pull back towards the 66.80. I would absolutely look to see, is it going to hold the 66.79.80 area, right? And then bounce back up, or would it lose that? And then I'd be looking to play it down to the trend line, or perhaps even like these averages here around 64. So I would watch that range too. So let's go ahead and we want to go ahead and put something here at the average, so that we know that we're looking at that level down next. And this is how I analyze the market, the upcoming data that's coming up the next week, look at the charts for the requests that I get, and for my trades, because I got bills to pay too, right? To look at all of those, this is the way that I analyze it. I chart the 6, analyze the 4, and thank y'all for watching. I know it's a long video. Make sure you watch it all the way through. Like, subscribe, comment, leave any critiques. Just knowing that I'm gonna pray for you. Amen. Or anything, any questions that you have, any comments, concerns, whatever, in the comments below. And I will see y'all at the top. Bye, my babies.